welcome. It's the Merrill and Jennifer show.
Yay!
Woohoo! All right, so we're starting out again. We're starting out big this year. Yay! That's amazing. That's awesome. I love that. Okay, so lead the charge here, Jennifer. What are we taking on, and what are we inviting our tribes to do?
So we're in January. So this is obviously being filmed live in January in the year 2022. So I want us to think about goal setting. What would we like to accomplish this year?
Yes.
And this is what I'm getting, as you always say, from my tribe. And I know from your tribe as well. If you don't set a goal, then you're kind of, it's like a GPS. If you don't actually have a destination of you want to know you're going to whatever destination, then you're never actually going to arrive. So It is really important to be very clear about what you want in your life and what you would like to see. And on a financial, as you know, you and I are both very passionate about financial literacy. And so we've started again with the basics, and there are 6 things that people need to know about their personal credit profile. We're going to talk about business profile next week.
Yes.
But this week, I really wanted to focus on those basics, Merrill.
Yep. And remember, in order to qualify for your first $100,000, and let's go big picture. What the 1-2 punch is going to be this week and next week. As we know from our boot camp and trainings at FICO education, et cetera, we know that your personal profile is what is used to determine business fundability. Business approvals depend on the quality of your personal profile. So this week we're talking about what does that profile need to look like, right? The high level. And then we will go back and next week we'll talk about what does your business need to look like. So let's count them down, shall we? The first thing that the gatekeeper of your personal fundability, and then in turn helps you with your business fundings. The first thing we need to do is an optimized borrower identity. Your identity is the gatekeeper to your approvals. Remember, we're talking about automatic underwriting, where you get approved in 30 seconds to 1 minute when you fill an application online. That's automatic approvals, automatic underwriting. They're looking at who they're going to lend to first. So your identity is vital to make sure. And we got to have, sometimes if you look at your credit reports, you might find you have multiple versions of your name. Some of us have multiple addresses and even multiple social security numbers. If you've done a mortgage with a spouse or something, sometimes that leaks onto your profile. We got to make sure we have one version so that the underwriting software knows how to identify you and exactly what's coming, exactly how to prepare your profiles to look at other things. So the next thing they're going to evaluate is what kind of revolving accounts portfolio do you have? Now, that's a fancy term. That's simply a fancy term for saying, the collection of credit cards, charge cards, personal credit lines, and things like that. So
that's everything. That's Visa, MasterCard, store cards. That's the whole
every kind of charge card where you can charge it up, pay it off, charge it up, pay it off, and has the option for a monthly minimum payment. So that portfolio can be high value, a high grade profile, and it can be a low value, low grade profile, and FICO and lending software grades you on it. So we got to make sure that to get business funding, to leverage that profile for business funding, we want to make sure that we have a high value profile. So that's the second thing that we need. Then the next one is we go to the third piece is your installment loan portfolio, which is where your mortgages are, including HELOCs. Technically, HELOCs are revolving accounts, but because they're real estate backed, everybody in the industry treats them as loans. So your mortgages, your home equity lines of credit, your student loans, personal loans, auto loans, anything where and an installment loan is there's a single amount, you pay the same amount every month until it's complete, right? So installment loan portfolio is the third factor that has to be optimized to show to lenders that you need to be taken seriously, that you would be a valuable borrower. Number 4 is what we call your banking relationship with a lender. Now, if a lender on the business side is going to lend us, is going to give us a business line of credit or business loan up to $100,000, we may want to establish multiple banking relationships so that we can have multiple hundreds of thousands of dollars. But each one of those relationships are really, really important. Every one of those relationships have to be developed on their terms. Think of it as the love languages. We've talked about this before, Jennifer. Love language of a lender. What do they need to see to feel appreciated, to feel honored, to feel respected, to feel like that we give them respect? So that banking relationship is number 4. Number 5 is what we call the accuracy of your profile. Does it have the same balance across all 3 bureaus when you look at a 3-bureau report? Does it have does the data points reconcile? Like when you fill out an application, are you using the data that the lenders already have on you, or are you, oh, I moved, so I'm going to put in a new address, and all of a sudden they don't know this address, so now you get denied just because you moved and didn't make the changes? So the accuracy of your profile is number 5. And finally, number 6, it is the what's called the 24-month look back period. So all of these borrower behaviors, all the things that your borrower behaviors are recorded and put on your profile. Your profile is literally where the record of your borrower behaviors lands, those borrowing habits. That profile is graded 24 months in arrears, right? The most recent 24 months. And so they look at your 3-month history. Have I been late, or have I not paid on time, or have I had high balances? All these types of things that they look back 3 months, 6 months, 12 months, and 24 months. So those are the 6 areas, Jennifer, that we get to optimize, and we're going to be covering each one a little bit more in detail. The boot camp, though, covers all of this in great detail, guys. Over 30 strategies on how to improve all 6 of these areas. That's a getfundablejennifer.com is where you can find out how to do a deep dive in every one of those 6 areas.
And that's a great one because
getfundablejennifer.com.
getfundablejennifer.com. Go there, register. The nice part about that also is that there's 2 days, it's live, and you can do it from the comfort of your home, because it's on Zoom. It's really convenient. But also the other thing that I think is really special, as we're talking about this being January and setting goals. So if you want to set goals, I mean, I've talked to so many people who have said, oh, this year I want to buy a house, or this year I actually want to buy my first investment property, or this year I actually want to start my first home-based business, but I need to understand how to get business lines of credit. So we started with the basics. We're talking about the personal lines of credit first, because you need to get that whole personal profile in good shape. And you need to understand. And then one of the biggest things about this, I love to do the myth busting, is that it's not all about whether you've had late payments. And that's why I really wanted you to talk about those 6 aspects, is because we want to set goals, but we also want to make sure that we don't have a preconceived notion about what we can and cannot do. Like, oh my gosh, I can't do it because
I had a late pay, or I have a collection.
Or I had some rough times over the last 2 years. Last 2 years have been, I think, pretty much a roller coaster for, I want to say, everybody, even though some people it wasn't as dramatic, but it's been pretty.
It's affected all of us, right?
Yeah.
So you guys, next week we're going to be discussing. So like Jennifer says, these 6 areas we go into mad deep dive in the boot camp. We're going to in these weekly calls on Monday, we're going to be sharing a little bit, because of course in 15 minutes we can't do a 2-day boot camp worth of treatment. But next week we're going to be talking about the 5 things to set up your business at this same level. So now we have the personal, and watch this. Guys, like, love, share this. Get it to people who are looking to do some sort of big ticket financing here in 2022. Buying the home, like you said, buying a home, getting a first investment property, even buying a car. All of these areas are important to be addressed. We got to address them, and then we'll pick up next week when it comes to how to set up your business so that it is fundable as well.
I love it. Thank you, Merrill. As you know, I say, yay!
Absolutely. So happy that we got this. Like, love, share. Make sure you get people this valuable information so that they can also set goals and make amazing changes in their life.
Exactly.
All right, guys. This is Jennifer and Merrill. Welcome to our universe. We'll talk to you soon.
We'll see you.